Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's topic, we're going to be talking about law office or legal office expense management. I must mention that this particular webinar has been approved for 1 hour of CPD credits by the Law Society of Upper Canada. So we're waiting for approval from some of the other jurisdictions, but for those in the LSUC boundaries, you are able to use this for 1 hour of professionalism credits, CPD credits. And you would probably search the Law Society website for Law Office Expense Management by uLaw, and that's what you would use when you file in your the number of credits that you have spent for the year. Okay, so this is going to be really interesting. The last time we covered this topic, it was not approved for CPD, but this time it has been approved, so there's a little structure to it. So we're going to walk through the various types of expenses, including both client expense as well as business expense, which you as a legal business owner should keep in mind. And I kindly request that you ask your questions through our chat window so that our support staff can answer that. You can ask those questions at any time during the session, or if you want to hold your thoughts till the end, we want to keep at least about 5 or 10 minutes at the end of this session for Q&A. Q&A is a big part of the learning aspects that CPD and Law Society would like to encourage. So though that would be a big part of my monologue, and we are recording this entire webinar and will be available and will be sent to you as a link. And that's one of the questions we had. Last but not the least, yes, kindly do use the chat window, and please to participate in the Q&A because that's how I think we as a community are going to learn and share. And last but not the least, as housekeeping, as part of the initial email that we sent to you, we had asked you if there's a link for an attendance. If you can confirm using that link, that would be much appreciated. Okay, so moving along in our topic with regards to law office expense management. Like any other uLaw webinar, today's webinar also has an agenda. And what we're going to be covering in today's 1 hour session starts with the differences between disbursements, which I call client expense, and the business office expense. So let's quickly determine what client expenses are or disbursements are, and what are those business office expense, which are both incurred, which are both spent by you as a legal professional, but how do you deal them separately, and what does that mean? So what are disbursements? How do you manage them? We'll kind of granularly drill down a little bit further into it. When it comes to disbursements, especially client expenses, depending on your style of how you work, especially if you are into trust accounting, you do have the opportunity to disperse that expense, as you know, directly to your trust account. So we're going to look at the merits and some demerits of using the trust account as a way of dispersing expenses, highlight some of the benefits. Talk about types of general disbursements. This is going to be really interesting, and we're going to use some examples after the presentation to walk you through uLaw of how you manage some of these different disbursement types. So I would start with billable or actuals. So an application fee would be a great example where you paid the Ministry of Finance, let's say $95 with no tax, and that's exactly what you're charging your client. And you may have unit rate expenses like fax, mileage expense for your travel, and you obviously as a legal professional will determine what those costs are as part of your retainer agreement with your client. And we'll also talk about how do you expense outsourced work. So let's say you're a professional in Toronto and you have a hearing in Whitby. You probably are going to use for help and reach out to, let's say, another legal association to represent you. And if they are to bill you, how do you bill your client for that outsourced work? Okay. Finally, we'll touch upon what are the expectations of the Law Society in terms of reporting and bookkeeping when it comes to disbursements. And then we would focus and shift gears to looking at business expenses and how do you manage them. Types of business expenses can range right from your office expenses, could be printing, stationery, things like that. It could be the rent, charges for interest and bank charges, and even other software charges that you may then have to spread across clients, right, from uLaw to DivorceMate to any other software that you may use as part of your practice. And finally, we'll touch upon the expense book and how that is very important to you, both from a bookkeeping guidelines perspective as part of one of the documents that's expected for you to showcase, but also for you as a business owner to understand what that looks like, okay? And the analytics that is a powerful engine that uLaw generates, ideas and insights that you should keep in mind as you start to deeper dive into the expenses world. Okay. So the first topic really is what are disbursements, or what is a disbursement? We wanted to kind of go with the wiki definition. A disbursement is the act of paying out or dispersing money, such as money paid out to run a business. And the most important aspect is really even when you're paying out on another person's behalf in connection with the transaction. So that's in most cases your client, where you actually pay in advance probably, or whether through that's trust or general, you pay that and then recover that expense. Okay, so in layman's term, I would say expenses incurred for your client by your legal office. Okay, from an accounting term, and that's the kind of the mirror image, is you probably still need to record it in your books to balance the accounts between what you've spent, invoiced, and recovered. Okay, and that could be different numbers. It could be a profitable number. It could be a number that's actually a loss to the business. But it's important that you track and measure it so that you recognize what those numbers look like. And obviously, as part of your audit, you are required to maintain proper books, and disbursement ledgers and journals are part of that audit requirement. Now let's slowly shift gears to a definition of what a business expense is. Again, an expense is, again, a business expense. It's the act of paying out money, such as money paid to run a business, such as rent, buying a computer, office furniture, expenditures, dividend payments, etc. So in layman's term, your business expense are the expenses that are incurred for keeping the lights on in your legal office. From an accounting perspective, you still need to record it in your books to balance the accounts when you spend and especially manage your taxes. So this is where it kind of differentiates between expenses being that for clients and how you look at it, how the Law Society looks at it, shifting gears to a business expense, what that means, how you look at it, and how the Law Society looks at it. Okay? So it's really important right off the gate to understand the slight differences between these two different types of expenses. So that's exactly what we've tried to accomplish through this particular slide, where we talk about the subtle differences between these two different types. And one key difference is between the client expense and the office expense is with the client expense, you would hope that these are recoverable in nature. And what I mean by recoverable is where you are able to pay for it upfront as part of your retainer agreement, ensure that you're guaranteed, or it's actually in writing, that those are expenses that would be recovered by the client. Again, it really depends on your style, but that's the hope. The style that I see in some cases where it's all in. So you probably say legal expense and disbursements put in, here's my flat fee of $1,000, period. In that case, you obviously manage the expenses, but you kind of covered it up through an overall flat fee, for example. But end of the day, it's still a recoverable expense that your client would then owe you. And why track them, right? Like, why do you track these disbursements? The key aspect is that if you don't track these disbursements, you don't know how much you're paying and how much you actually need to recover and who to ask. Okay, so if you're just randomly spending money, not knowing for whom it is and how much it is and when is the right time to recover and how you do it, then you're actually just walking in blind. So it's really important that you track it. And from a business standpoint, it's equally important that that expense is also related to the HST, GST, or PST, depending on jurisdictions, that you've probably paid that you either have to recover or you have to pay the government. Okay, so these are some of the important differences and the I would say the importance of why you track disbursements and track these expenses and ensure that you have a process to do them. Okay, and for those who are just joining in, I kindly do request to use the chat window for any questions. And yeah, and how do you manage these disbursements? Okay, so what are the key steps that you could potentially take to manage this disbursement? So let's say you've got a client, you retain them, and part of that retainer agreement is where you determine how you are planning to manage disbursements or expenses, if you will, on behalf of your clients. Some of the key steps. Trust or general, regardless of whether you take that money out of trust or whether you actually take it out of general, invoice the client, and then recover that or move that money from trust to general. Regardless of those two different ways in which you can accomplish it, these are some of the common key steps that you probably want to keep in mind. One of the most fundamental aspects to disbursement is being able to record the disbursement when it happened, as it happened. So if you have or can build methodology, whether that's based on a discipline that you have or a software that can help you do it, whatever the means may be, it would save you a lot of time and grief if you are able to record a disbursement or an expense when it happened, as it happened, so that it's a kind of a peace of mind. So record the disbursement, how much was paid, how was it paid, and that's really important to capture, and what was the reason for that expense. Do record the client's name and the matter that this disbursement was related to. Because again, you want to make sure that you have a process by which you can charge that particular client, raise an invoice, and recover that expense. So for which you need to know who that person is. And if paid from general account, then you probably want to decide what portion to invoice and when to send that invoice to the client. So let's say your invoice is a combination of the legal dockets that you have and disbursements. You probably want to build a style of having a recurring invoice that's being sent out. Get in the habit of giving them interim bills so that your client knows and expects that invoice on a regular basis. If it's a kind of a one-time deal, you probably would then encapsulate all of that into one invoice and send it over. Regardless, you decide at what junction you probably have to include those disbursements as part of that invoice. One of the key steps that we recommend is before you actually generate that invoice, ensure that you generate a pre-bill or a preview. That gives you a good view of what that invoice should potentially look like so that you're happy and comfortable in generating the actual invoice and sending out to your client. So a pre-bill, as underrated as it seems, is a very important step that legal professionals do take today, and something that you want to keep in mind. The third point is whether you want to pay for it through your trust, so that you're taking money out of trust, or whether you have to recover that expense, meaning you paid out of general, raised the invoice, and then recover that money, moving trust to general. Okay, that's a very important step, but it really fundamentally comes down to your style of doing it. If you don't want to deal with the hassles of raising an invoice, ensuring your credit card payments are on time, and recovering it, and if it's just a matter of dealing with trust, that's a particular route that you probably should be looking at. Or if you have a process and if you're highly disciplined and you want to collect your Aeroplan points, then you may want to go down the path of paying that using your own credit card and then recovering it. But please do keep that in mind before you retain a client, before you start down the path of invoicing your client. And last but not the least, record the invoice and the necessary expense that needs to be recovered. So as much as you raise an invoice, please ensure that you have a copy of it so that you could be rest assured of that recoverable. The next slide really talks about how did you spend that money and what should you record. Okay, this is always a big question that our clients ask, and we made it as a slide so that it's fairly simple and straightforward. And this is where I want to, again, maybe reiterate the need of differentiating between client expense payments done through trust and client expense payments done through your general account. So let's assume you as a legal professional are in the business and have both a trust account and a general account. You obviously know that when you actually incur an expense, so let's say an application fee, whether it's $95 or if it's $350, you are now able to spend that money, or let's say you're writing a check to the Ministry of Finance for that application fee. You could either write a check from your general account, or you could actually write a trust check. And what is the difference between doing so? When you actually write a trust check, keeping in mind that a prerequisite that is you have a retainer in place. So you have, let's say, a $500 retainer that you have received from your client as part of that initial discussion. You then use those funds to pay off that $95. So you're writing a check, the $95 comes right off that $500 that's in the retainer. Okay, it's nothing else that you need to worry about. Let's look at the other case. The other case is where you're paying a general check. So you're writing a check, cutting a check to the Ministry of Finance out of your general account. Now it's there's one additional step in doing that. The money just doesn't come out. What you need to do is write that $95, raise an invoice so that you're basically telling your client, you know what, buddy, that's that expense for that application fee. I'm letting you know through this legal document that I'm going to move that recoverable expense from that trust account into my general account. Okay? Those are the two, or the one big difference between trust and general. So if you want to keep it simple, if you can be disciplined, you know how to deal with it, you can move money straight from trust to general. Or if you want to use your own credit card, your business credit card for all of those expenses, because that's how you manage your expenses, then you probably should do it through general. Okay? But regardless of how you do it, the particulars of the information that you capture still remain to be the same. So you still need to record the date. You still want to ensure you record the amount, including the appropriate taxes. There are certain expenses that have tax exempts, like the application fee. There are other expenses such as fax or mileage that probably include taxes. So you want to keep that in mind as well. Record the method of payment. How did you pay for it, right? Regardless of whether it's trust or general. And record the matter and or the client for whom that was incurred. And if it's a general payment, what would really help is also going the extra mile to understand whether it was paid through credit card, your personal pocket or owner's pocket, or someone else in your office paid for it, then that means that your law firm then owns them that money, right? So you want to ensure that you have a way to capture how you paid for it. Now, let's say you have done that. The next slide really talks about when do I recover the disbursement and how should you do it? As I mentioned, the best way to do it is by raising an invoice, especially if it's a general expense. Okay, I think I've kind of beaten this to the death, but I do want to reiterate that an invoice is that legal document that you can share with your client as a means of representing both the legal work that you rendered as well as the expenses and the disbursements that have occurred in dealing with that matter. Okay? Record the expense information with the date and the amount to taxes. I'm reiterating this. There's a method to the madness because many times our clients don't, when they don't have a software, before they're using a software, a means of doing it, this is all information lost in translation. Okay? So put in your expenses, raise that invoice, move money from trust to general. That's another next step after you raised an invoice that many of our clients fail to do. Now that it's your money, the way that you can make that money is by moving it from the trust account into your general account. Okay? So how do you recover your disbursement? Raise that invoice and move that money from trust to general. If it's a trust, that money is taken out of your trust anyways. It's never your money to begin with. Okay? And the reason you want to bifurcate or divide this and ensure that all these transactions are logged is behind the scenes, all this matters because these are the particulars and the information that are going to translate into ledgers and journals. And we're going to have a look at that during the later part of this presentation. Okay, so all this information gets into those wonderful documents of ledgers and journals that are then required by the Law Society as part of the bookkeeping guidelines for the audit. So once you create a certain method to the madness and a way you go about doing things, it's going to be much more simpler and easier. Now, before we move on to the actual demonstration of how this all works, let's take a moment to look at the different types of disbursements. And I'm sure most of you listening in today are aware of the different types of disbursements. We're just trying to add a little bit further information, little nuance, if you will, in terms of not only the types of disbursement, but whether it's a trust or a general, and we'll also give you some examples of how you can make profit margins too. Okay, so starting with billable, and we spoke about the application fee, that is something that you could use both your trust account and general account to expense, right, your disbursement. Unit rate, only deal with your general account. So if you're basically doing a mileage, if you're traveling, say from point A to point B and you charge 54 cents a kilometer, then that comes out of your general account. If you charge for travel time, sometimes if you're traveling to another jurisdiction, you probably want to charge for the time spent as well, then that also comes out of your general account, okay? It's not something that comes out of your trust account. Recovery of expenses on actuals come from both trust and general. Here's the important point to note. Any recovery of expense with a profit margin comes only out of your general account. It's really key to keep in mind what that means. So let's look at an example. Let's say, you have a certain software that you use, could be DivorceMate or anything else that you use that are then shared within your clients. And let's say you have DivorceMate for $300 and you bought that at a discounted rate from that software vendor for 3 licenses. But when you actually disperse that license per client, you have the opportunity to charge your client $120. So instead of the $100 that you would charge your client, you have now the opportunity to charge them $120, where you are now making that 20% or $20 of a profit. That expense comes out of your general accounts, so that's something that you keep in mind. Same thing applies to outsourced consultancy. So we briefly touched upon how you may want another legal practitioner to represent you in a court that you can't get to. So he or she from that legal law firm, might then send you a bill. Let's say it's for $150. That's an expense on that matter. But when you do expense it, again, you may have the opportunity, you may or may not, but if you do plan on charging your end client $175, so maybe a markup of a $25, that's again done through your general account. So we're going to touch upon these different types, but some of the disbursement types are billable, unit rate, mileage, and travel time. Okay? Now we move to, now that we've kind of understood what disbursements are, what are the disbursements when it comes to client, or rather expenses when it comes to client, and expenses briefly touched upon with regards to business, we now want to focus on what are the documents that need to report disbursements, both from trust and general, that are required by, let's say, the Law Society. Okay, so let's say during an audit, some of the common documents that are asked for are the disbursement ledgers and the disbursement journals, both for your trust account and general account. The quick question is, if I don't use trust, do I need these documents? Absolutely not. So if you don't use trust at all, and if your business is purely based on a general accounting, where you don't take money in advance, there's no retainer amount, obviously this does not relate to you. But if you do have that pooled trust account, mixed trust account, and a general account, then you do need to generate the disbursement ledgers and journals for both those accounts. So really do keep that in mind. Want to capture obviously the fee book with the appropriate taxes captured part of that document. And some of the examples of the Law Society's bookkeeping documents that you could probably see in my screen right now for both trust and general. So let's quickly highlight the client's trust ledger, the first ledger that you see on the top left corner. And this is for Kim Kirby. And you look at the mortgage advance, the receipt, the transfer that's being done. And bottom of that, you look at the actual transfer to the general after the invoice has been raised. Okay? So that's your trust ledger. Just below that, you actually look at the general receipt journal. So you're looking at disbursement ledgers and journals. Here's a good example of what a general receipt journal looks like. We are going to take a deeper dive into it later on, but just kind of walking you through what these documents represent. A general receipt journal has obviously the date. So when did it happen? When was that expense? Who did you receive from? The amount and the method. And the method of payment is really how did you get that amount, right? Similarly, when you look at your general disbursements, okay, this is all revenue coming in. Now you're looking at disbursements. There's a lot more information that's being asked for. So what was the date? What was the method or sort of a reference number that you could use? Who was it paid to? Okay. Additional particulars could be the category of that expense, the amount. Oh, sorry. What happens when you have fast fingers? The actual amount. But if you notice, a very important column here is the HST paid. Again, if that applies to you, if you're collecting and paying HST, it's very important to keep in mind. That amounts to the total paid. So we'll definitely look at how you generate trust and general ledgers going forward. Okay. Now that we've covered what client expenses are, so kind of really the first half of the equation was really talking about client expenses. And the overall topic of legal expense management, we've covered, or we've kind of gone through what disbursements are, which are really the client expense, and how you manage them through trust in general, and what are some of the rules that govern that, right? Now we want to take a short pause and move on to business expense. And let's quickly cover what those business expenses are, and then move on to showcasing how you track and measure both these client expenses and office expenses or business expenses for your legal firm. Okay, we already spoke about this, the definition of a business expense. So let's look at some of the types of business or office expense that you should keep in mind. Some of the office management expenses could include the furniture, the stationery that you buy for your office, any law society fees, association fees that you may have, your phone bills, gas, meals, advertisements. And you want to keep in mind that these are also categories that you probably use as part of your tax, right? So as part of your tax recovery or part of your the expenses that you have for your business, these are fantastic categories that your tax accountant would love to have if you have a way of capturing all this information when it happens. Another popular category of office expense is the rent and property maintenance. If you are renting an office space, then that's an office expense. Bank charges and dividends are something that we come across quite often in the legal business. Sometimes, whether it's plus or minus, there are always certain charges applied or certain dividends that are applied to accounts you want to keep in mind. Again, if you're a law firm employing individuals in your company, salary is a type of expense. If you're a solo firm, even if you have an admin that you're paying a salary, that's something that you want to keep in mind as an expense. And an expense is to pay back borrowings as well. Okay, so if you've actually borrowed and if there's an interest, those are expenses on those borrowings as well. So just to give you an example of the types of expenses that you want to keep in mind when you think about business expenses. Just taking the same flow of the client expenses now, we want to talk about how do you record office expenses. We spoke about how client expenses, it's best if you can track them as and when it happens. So that's the best way to kind of really get a hold of it. Office expenses are no different. You do want to record them, and more importantly, have a mechanism of either taking a picture or having that shoebox where you actually drop those receipts, because receipts are equally important when it comes to business expenses. What do you capture among all these business expenses? The date of the expense, always really important, when it happened. Is there a brief description of what that expense was for? Okay. If you are able to categorize the type of expense, it becomes much more simpler and easier for you to be in peace with where your money is going with regards to your business, right? So if you're able to build a little bit of a science, a bit of a discipline around coming up with these different types of expenses, be it for advertisements, stationery, they not only allow you to keep a tab on your business expense, they actually will help you when time comes to filing your taxes too. How did you pay for it? The same 9 yards with regards to client expense. How did you pay for it? And whom did you pay? That's very important. And how was it paid? So as a business owner, you obviously have your business general account that your legal firm name has on it. You may have, let's say, a business credit card that's then associated with that business. In addition to that, you may still have your owner's pocket. So once in a while, let's say as a solo, you go out there, you have to, let's say, fax a particular document, and it's $1.25 and change. You're not going to write a check for it. You may not necessarily swipe your card to pay for it through credit card. You may actually pay for it using your own cash. So let's say that $1.25 is then something that the business owes you as an individual, right? But it's still an expense, and it's very important that you capture it as an expense paid out of the owner's pocket, for example, or cash account. Now, there are many ways in which how you can record them, and we spoke about recording them as and when it happened. Now, you can obviously have an Excel sheet that outlines every day, go through those different receipts that have happened for those different expenses and make a quick ledger of all those expenses that have happened, and that's being really disciplined. But then with the advent of technology, we've already spoken about this, and we're going to quickly walk through with uLaw as an example of how software can enable you and save you time in doing this much more efficiently and faster, so that a lot more time is saved for you to spend on your legal business as well as in your family. So through a demonstration, we're going to capture, you can either record them individually, okay? So kind of go in, say rent, paying Mattamy rentals, or you could do it at the end of the month. Through the advent of technology, we have now the ability to really transact or import all of your bank transactions that have happened for that month. Maybe it's that last day of the month that you reconcile your general account or your business office expenses, and we're going to walk you through how that works as well. Okay. And what are the documents that need to be maintained for office expenses? So this is another popular question. A very good example would be an expense book. An expense book really should give you an insight on a timely basis, whether it's monthly, date range, quarterly, what the different expenses are by categories, even better. HST or tax payable statement. So how much of HST do you either owe the government or the government owes you based on the difference between the HST collected and the HST paid. Meaning if you paid HST for office expenses and other things, they're used to balance them out. Expense statements and profit and loss statement. Profit and loss obviously is something that you can quickly have a snapshot of what your revenue is, what your expenses are, and what your profit or loss looks like for that time period. And another important document that you want to keep in mind is the borrowings report. Okay? So let's have a quick look at all those as we move along. We obviously have covered about 35 minutes into the presentation today, and I do want to save some time up for Q&A. My last slide for the day is going to talk about there's so much that's going around. As a business owner and legal professional, as simple as it may seem, there are so many different things that are going around. How do you get a better control for the data that's in your business? Okay, so we talk about analytics. Analytics is a way in which you can make sense of the data that you're already capturing and have a way of tracking, measuring, and analyzing what that data means for your business. Okay, so in uLaw, we obviously have our analytics engine. Every software, I'm sure, has its own ways of capturing this data. We actually provide it as part of the software itself, but it's equally important that in today's legal tech scenario, you don't have to go down the path of doing this manually, putting it in Excel sheets. There is software out there, and you probably should look for help to make your life easier. And with technology, with the commoditization of information technology, all this is available to you the click of a button, whether it's in your laptop, desktop, or even your mobile phone. Okay, and what are the top analytical items that you may want to keep in mind? Okay, what are your top expenses? You probably also want to know who are the top offenders, right? People who are not paying you on time. What is the ratio of expense on a monthly basis between expenses, which are recoverable, hopefully, and your actual revenue? So if a good 80% of your revenue that month is based on recoverable expenses, it's probably not a great thing, again, depending on your line of business, but you're then dependent on your client paying you for those expenses, right? Are you able to optimize through the analysis of the data that you have? Are you able to optimize, which is very, very important. One of the most important reasons why we all use data and run behind it is so that we can make sense of it and take corrective measures to be better and more efficient and profitable, right? So can I use the data about my expenses to be a lot more smarter about how I can reduce expenses? If I'm paying, I don't know, if my rent has increased over the roof over the last 6 months, and I'm able to see that, maybe I make a smart move of moving my rent space. Or if that's what I have to live with, at least I know what the number is. Last but not the least, all this boils down to figuring out the health of your business. You always want to keep in mind, for a profitable business, basic sense, the revenue is higher than the expense. And you want to keep your expenses low so that that's going to add to your profitability and your bottom line. So analytics can really help visualize that data in forms and such as tables and insights that is very meaningful to you at the end of the day. Okay? And again, without it's keeping in mind that you do have software that can help you through this process. We strongly believe that it's important for you as a legal professional to think about a legal accounting software. Okay? A legal accounting software that can really combine practice management and business accounting, because that's what's going to give you the 360 view of your business. And when it comes down to expenses and it comes down to these numbers, the top 4 areas you want to keep in mind: compliance, accountability, the ability to digest data as analytics, and the ease of use of bringing that data to you as the person who's consuming it. Now we're going to shift gears, now that we've spent about 40 minutes and you've been patiently listening to me as I rambled away about client expenses and office expenses and the nuances of it. Hopefully I didn't put many of you to sleep. I want to use the next 10 to 15 minutes to really showcase to you in real life how would you do this, right? If you had a software, what should you keep in mind? We're obviously just using uLaw as an example to showcase this, but you would obviously do this in any software that allows you to understand the legal accounting aspects of it. For those who don't know uLawPractice, we do offer CPD sessions on a monthly basis. We are a proudly Canadian legal accounting and practice management software company based out of Ottawa. Please do visit us on our website, uLawPractice.com. And we actually do provide fun webinars. In fact, four of them every month, one of them being a CPD session like today. So it's on a Friday from 3 to 4, and I know how important your time is. And for those who have showed up today, thank you very much. It's not done yet. We do offer a 30-day trial, and for those who are customers of ours, we do have a referral program. Thank you very much for listening in. And now I'm going to shift gears from a presentation to showcasing uLaw and showcasing the components that we've spoken today about expenses, both client and office expense. Okay? And please do feel free to send your questions through our chat window. Our support staff are available to take those. Okay. So let me quickly jump into my uLaw account. So I'm basically logged into a Playground account that we use for all our demonstrations, and I'm logged in as our fictitious lawyer, Roger Moore. And let's quickly look at a contact or a client. So let's say I'm looking at a client, Alex Johnson. I'm just going to use Alex Johnson as an example, or maybe even better, I think someone asked me, how do I create a contact? So first up, let me just quickly go ahead and add in a client. So I'm just going to say Mr. Spidey Man through an internet advertising. Put in a fictitious address. Put in a mailing address. Obviously, as legal professionals, you don't obviously take the step of ensuring there's no conflicts. Yeah, I think it's a quick question. Show how uLaw reports determine what we should be paying the government for a HST remittance. Okay, that's a fantastic question. I will keep that in mind as I spin through this this little script that I'm trying to build. So let's say for Spidey Man, we go ahead and create a matter. And I don't know, really because of everything that's happening politically today, a fence issue always comes to mind. So I'm going to put that in small claims. Linda, I'm certainly going to answer your question. So let's go ahead and save. So it's basically a fence issue that you're working for Mr. Spidey Man, and let's say it's a small claim. Let's assume, again, we're going to talk about client expense first, and we're going to talk about those two different types we spoke about, both trust and general. So to do that, to have the trust in play, you want to keep in mind that there's a retainer that you take from the client. Okay, so let's take in a quick $500 retainer, the date, the amount, how he paid you. Maybe Mr. Spidey Man paid you through check, goes into your trust account, your mix or pool trust account. You may decide to give him a receipt. We'll quickly look at the retainer receipt. But most importantly, it's recorded at $500. So I'm not going to go into any dockets and any of that. I'm just going to strictly focus on the expense aspect of it and also look at how we can showcase those HST. But, just for the fun of it, just so we showcase how you collect HST, maybe I would do a quick docket. All right, so let's look at this. So maybe I do an initial client meeting as a docket and make this a flat rate of $200. Now let's take an example of how you would disperse this client through trust. Okay, let's take that as an example first. So to do that, you would go into the disbursement. And when you actually look at disbursement, we're going to touch upon these 4 different types we spoke about. Trust, general, I'll talk about what miscellaneous means, and then there's consultancy expenses. So in this case, to showcase to you the example of a trust. So let's say this particular disbursement, you're going to take money right off your trust, and there's about $500 total left in trust because you've not raised an invoice. Then you go ahead and say paid from trust, and I'm going to say this is for $80, and I'm making this up, the date, because these are the particulars of any expense disbursement, right? The date, the amount, the method. How did you pay that expense? So let's say you wrote a trust check, and the check number is 765, and the description is application fee for matter number SM687359, which is always a unique number. And then who is this paid to, right? Because those are some of the particulars we saw during the presentation. That's also asked within the audit reports. All right, who is this paid to? So this was paid to the Ministry of Finance. And where is it coming out of? Because this is a disbursement out of trust, it is obviously coming out of trust. You may even want to print a check out of uLaw. So it's an $80 check that you're writing, and I know that number doesn't make sense, but for the purposes of this demonstration, it is what it is. Here is that check leaflet that you could then sign, or actually you would print it off. This would emboss on your printer. And then you're gonna send this off to the Ministry of Finance. Now, if you notice, your trust receipt just dropped by $80. Okay, so that's gone from the bank. So this is assuming that once the Ministry of Finance encashes that check, the trust amount in your bank will reduce from $500 to $420, because that's the amount then that's still left in trust to play with. Okay, and very similarly, you see the projected balance dropping to $194. Right? So let's go ahead and now look at an example of how you would expense using a general disbursement. So we spoke about trust, and when we spoke about general disbursement, we said the big difference is there's that intermediary step that you pay for it, raise an invoice, and then move that money from trust to general. So to pay that disbursement through general, let's say paid from general. Now we spoke about those different types of disbursements, right? So right here you have those different types, right? From billable to mileage to unit rate, travel time, etc. So let's say I use an example of a fax, which is a unit rate. The screen changes to tell and asks us, all right, how much of fax did you actually send out? So I'm going to say 100 faxes, and this is the rate that you probably want to charge your client. Okay? So let's say you charge your client $1 fax, and you are now adding that $13 tax. Okay? You may also want to report this at the same time to your business, because then you probably paid for this through either a general credit card or your owner's pocket. So let's say for fax, let's say you did it out of your office. I'm just going to go ahead and say no expense report. So now this gets applied. So this is how you now disperse this client, or you showcased that there's an expense involved with this matter for $100 plus 13% tax and that's what you see with the disbursement in general as $113. $113 disbursement means the general disbursement. There's obviously a flat rate fee, everything else, right? Now, to recover that $113 that you just paid, including that $13 of HST that you paid, it's important, obviously, to raise an invoice. And we spoke about how important it is to generate a pre-bill. That's how you would do it. I'm just going to quickly go ahead and raise an invoice. So it's important that you raise that invoice to recover the $113. And now let's take a look at that invoice and understand how those two disbursements for this particular matter have been reflected between trust and general. So here's that docket of $200 plus the 26% tax that you have now collected through this, right? So it's important that you keep in mind to answer that question about HST. Here's the $26 we've collected. And here's the general disbursement for which we just charged the client $100 plus 13% tax. There's the $113. It talks about the other payout from trust, which was the $80 that was taken out of your trust account. So your client knows exactly what's happening on his file and with his money with this one invoice, clearly telling him that there's an $81 balance left in trust. That's not the real focus. So let's move on to do another type of disbursement. Let's look at a miscellaneous expense. So let's say you went and you took your client out for a quick coffee. Okay, so let's say you went out for, I'll say meals, I'll say coffee with Spidey. You can even put in the matter number if you like. And let's say you spent $10, right? Even better, I'm going to say $40. That's about $45 with tax. Now, let's say you were in a really good mood that day and you tipped this. Obviously, Tim Hortons is not a great example, but let's say you went to another local coffee place and you then ended up paying him $50, $40, and there was a disallowed expense, which is really the tip. So it's disallowed as part of the miscellaneous because, hey, you're not going to charge your client for the $10 tip that you paid. That becomes an office expense. That is your office expense that you need to manage. So though the $45 is what you're charging your client as your general disbursement, $55 is really what happened in that transaction, where $10 is the disallowed expense where you paid a tip to that individual. And you could say paid to local coffee shop, Inc. Maybe you paid through a credit card, right? It's really important how you capture how you paid for it. And if you paid through a credit card, TD or CIBC is going to give you a transaction or a reference number. Now let's take an example and look at this as well. This is another way that you've now dispersed that $45, and there's $35 sitting, still left in trust. We spoke about a final type of disbursement where you could actually make a profit margin at $20. Let's say there was a software and you're spreading the software cost across multiple clients. This is how you do it. And a consultancy expense would be an additional example. So let's say item name, consultancy, legal representation. Okay, and let's say you're charging your client $30, whereas that consultant only charged you $20. I know this is a very stupid number to use, but really in the context of what's sitting left in trust, just trying to max it out. So let's assume you paid $20, but you're charging your client $30. That is the profit margin you're making of $10 on that transaction we spoke about. And let's say this is for Megan Consultants. Again, a credit card is how you paid for it. Go ahead and save. So very simply, you just gone ahead and told the software really what happened in real life, okay? And behind the scenes is where all the ledgers are being built. Now that we've done that, let me go ahead and erase that final invoice so that now you can recover those general expenses. The only trust expense so far that we've incurred is really that $80 expense. And we spoke about how it doesn't end there. It's very important that as soon as you raise the invoice, that you are now able to transfer the eligible amount from trust to general, okay? Those 3 disbursements that you just had. So you had it for your consultancy, the meals, and the fax of $418 is moved from trust to your general account. Let's say you write yourself a check. You do the transfer. Now you've made your money, and this is how you've now quickly recovered that expense from your client. You've done all of this. All this is fun and dandy. Now let's focus on those reports and documents we looked at, starting with the first question. How do I capture the HST? Now let me just quickly pay out Mr. Spidey this $1.90 because we're not going to be using it. So let's refund that retainer of $1.90, paid in cash, refunded the retainer amount. It's going to Spidey, let's say out of your own pocket, and that's pretty much it. This becomes a zero balance. Now let's look at all those fund reports and documents, okay? And before I do that, I want to show you about the office expenses. Again, lack of time, but I'll quickly want to show you how you can manage your office expenses as well. So when you look at your expenses, there are many categories that you can create yourself. You can obviously add client expenses, but we just did that using the matter itself, right from the matter screen for that client. But if I look at my office expense, you can now create multiple categories for those office expenses. And under each category, you could create subcategories, okay? So let's say we want to create a category under our expense, under office expense, call it Law Society fees. Or even better, let me just call it Legal Society fees. Okay? Now let's say you pay annually about $150. That's part of now your office or business expense that we spoke about. How do you ensure that you put that in? Let's say you got a $150 bill from the Law Society. You're going to say, hey, it's an office expense that I'm recording, and it's basically a legal society fee. April fees, say $100. $13 tax is what you paid. Paid through your credit card again. Very busy card for that month. That's how you just recorded a legal fees. If you wanted to record, let's say stationery, it's the same thing. And you basically done that as and when that transaction happened. Or even better is that you're able to quickly import your bank statement for the entire month. So let's say I've got the month of April. Can activity for a month April. You download that CSV from your TD or CIBC bank, and you just upload it right into uLaw as an example. And this would pretty much bring each and every transaction that's happened in real life and then showcase it to you for you to take an action so that you're not now doing it one item after the other. You're doing it as an entire month of work. So let's say there was a chapters. You could say, hey, it's an office expense, and it's basically meals that I had coffee at Chapters or the Starbucks. Okay. Once it's done, it's completed. Look at all those different things that I've completed before. As soon as again, there's some smart learning here. As soon as it recognizes that it's an expense from Shell. It realizes that it could potentially be a gas expense. It kind of reads the Shell, Petro-Canada, etc. You go ahead and hit submit. So you could either take action on reporting your office expense, like how we did it for the Law Society fees, as and when it happened individually, or you can go ahead and import your entire month's bank statement into the software and then go one at a time, let's say at the end of the month. Regardless, it's still captured and it's accounted for. Now let's go back to the different documents that we spoke about. There's a compliance document that really talks about the general receipt, the disbursements, the general disbursement right here. But let's generate one at a time. I'll start with the tax. So we spoke about the tax. Here's the report, which generates the monthly tax. I could do a quarterly, but I just want to capture the monthly tax. So this is going to capture one single document that captures all the HST received and all the HST that have been paid this month. Okay? Tells you in a quick snapshot, that's the amount that you owe the government for that month as of today. And how does this account for? The particulars of the date, the description, the HST paid for all of those expenses, as well as the HST received as part of your legal fees. Okay, really interesting, is it not? That it really tells you in a single snapshot everything that you did. Now let's look at today's date. Look at Spidey Man for all the work that we did for that client. So we basically captured the $5.20 that we paid out for his meal, the $3.90, the $19.50, right, and the $13. So it really tells you right at the bat everything that's happened. Okay. Now if I go into my ledgers, we spoke about the expense ledger, for which we spoke about the journals, which are all the documents that the Law Society is going to ask you for. You've got your journal receipts. You've got your payment expense report. But most important, let's do a quick expense book, which is one of the important documents as part of your audit. I could do it for all clients, or I could do it for a specific month. So really what's happened is, as you capture those expenses, whether it's for your client or for your business, it's important that the particulars are tracked, measured, and are made available to you as documents that you then have to just represent. So this talks about all the expenses for all your clients for that month, okay, for this particular law firm. It talks about the business expenses, the individual expenses. So if you look at Mr. Spidey Man, you've got his expenses too. Even further, it categorizes your expenses based on different classifications. How much of your monthly expense went into rent? How much of it went into office supplies? And how much of it is really into the expenses on client's account? You can quickly generate an expense report. We generate a profit and loss statement for that particular month. And we spoke about the analytics engine, which is a very powerful data insight provider that tells you now the expense chart by category for the month in a visual representation. So now you know that 42% of your expense was on expense on client's account for the month of April. Now let's say you want to compare that. How was it for me last month? You can do so in a snapshot, right? So now you're able to, now that you've captured all the data, this is the power of the analytics engine that's telling you that compared to last month, in fact, last month, your expense on client's account was 63%, whereas in the month of April, it's now only 42%, right? So that's where I want to leave you with the importance of understanding the different types of expenses, the differentiation between a client expense, different categories under client expenses. How do you track them? How do you measure them? How do you account for them? And how do you keep in mind all the office expenses and the business expenses that you incur in keeping the lights on of your business but all the documentation that needs to go behind it to ensure that you've tracked and measured it. Okay? There you go. In one statement, you have your expense statement, which basically tells you, including the $170 that you paid your consultant, the different rent and taxes, the legal society fee of $100 that we paid today. And with that, I would like to open the floor for any questions so that we can wrap this CPD session for today. And kindly request you to use our chat window, and I hope I was able to answer the question with regards to the HST remittance. Yeah, please feel free to send your questions. We still have a few more minutes that we could spare to ensure that you've learned through the session. I didn't just want this to be a one-way street. And also, we kindly request if you could use the link provided in the email sent to you about your experience with this webinar, also marking your attendance for the CPD session that the Law Society would probably ask us for. And also please to send us your feedback on topics that we could use to not only for CPD sessions, for non-CPD as well. And thank you very much. I think there's a question about being integrating with Realty Web and Lawyer Done Deal for real estate transactions. That's a really good question. We are in discussions with Lawyer Done Deal, and in order to explore how we could better integrate the two platforms to make it a lot more simpler and easier for our clients, both the clients that we have on both platforms separately, as well as the new clients that would appreciate that integration. We would most certainly bring that to your notice as soon as we've had a firmer conversation. Yeah, quick question is, would this presentation be available? Yes. This presentation would take at least 24 hours before it's recorded, fine-tuned, and it's then made available on our YouTube channel, which is youtube.com/uLawPractice. But we would also ensure that we send you an email with the recorded presentation. And that's why it's important, if you would be kind enough to acknowledge your participation using that link in your email. Yes. So in terms of how do you record this, so you would go into the Law Society's website and you are able to search for the topic Law Expense Management. That's the topic that the Law Society has provided, and you should find us. If not, you could definitely send an email to LSUC mentioning the subject line, which is, let me bring it out. So Law Office Expense Management is really the title, for which we've actually got the 1-hour CPD credits, and you could use that. If none of that works, please send us an email, and we would be able to help you out with that as well. A little bit more of an interesting question that I received via email. How do I know how much of trust money is still left in trust? I guess there's a couple of different questions that I could actually infer from that one question. If you really want to know what your trust balance are, you're basically doing you can do a trust balance report. You're looking at balance, and then you're looking at trust, and you're generating the trust balance. Or if your question is about knowing what the invoice balance transfer amounts are. Then we have a report under invoice balance that really tells you, so this is the step that I mentioned where you have money left in trust, you've just raised an invoice, but you've not moved that money from trust to general. Okay, so that's the question you're asking about. Fantastic. So if that is the question, we do have this report called Invoice Balance, and I showcased this during all my presentations. It's really a report that all our customers use regularly, and it basically outlines each and every transaction for clients. So for example, if you look at John Bell, or even the last conversation that we've had with Mr. Jim Johnson, or let me look at the trust balance. Here you go. So for George Timothy, it's about 594, out of which 5450 is still left in the invoice balance transfer, which means this is money sitting in your trust account that you still not moved into your general account. So you're basically looking for George. So you've got our quick view, searching for Mr. Timothy's matter. There's Mr. George Timothy. When you go into this matter, you know obviously if there are multiple matters, then you obviously get into those individual matters. But clicking on the question mark, you right away know that that's the 5450 that you can transfer. So you may have transferred it in real life, but the bookkeeping software obviously didn't know about it. So this is the way you would reconcile really what happened in real life. So you tell us, yeah, I did move it from my trust to my general, and I actually did this in February because it was a bit of a catch up, right? That would still be available in your bank. And you tell us how you got it. If you did an electronic fund transfer, then you also obviously keep in mind that you fill a Form 9A. But again, I wouldn't go into those details right now. So hopefully that answered that question. Yeah, and then what you see on the screen is really the question. So the question is, how do I manage my disallowed expense, which is the tip that I paid the customer or that the person who served us. So here is the Spider-Man meal. So if you really look at it, it talks about the $40 that I paid, the $10 of disallowed expense, which is the tip, the $5 and HST payable. So we kind of capture it all, and all you have to do is just tell us really what happened. If you really look at the miscellaneous expense for the $40, this is for a different client. Sorry, I apologize. But I think that helps you understand. So if you really look at the Spidey-Man matter, and you look at the $40, you basically told us that what happened in real life. That you paid the $40, that's what you're dispersing, but you did take the $10. But behind the scenes, we capture in the accounting touch points that need to happen. Okay? All right, if that's kind of the last question I'd like to take for today, thank you very much for your time, and have yourself a great weekend, and we look forward to seeing you at our next CPD session and our fun-filled webinars every week. And please do register for our webinars, which is uLawPractice.com/webinar. Thank you so much, and have a wonderful weekend.